If you have a job like this on your WIP schedule, think twice before you finalize that WIP number. I'll tell you why. We have a project here that's 95% complete. The way we derive that is divide total cost to date, 475,000, by total estimated costs. It's 95% complete with $25,000 in cost to complete. That is the $500,000 minus $475,000, $25,000 left in labor, material, subcontractor costs, whatever. We have $25,000 in cost to complete the project. However, and this is where this job looks goofy, we have $160,000 in underbillings. Now, as you'll recall, underbillings are there to prop up your revenue or gross profit on an open job to match your estimated gross profit percentage. So here's where it gets a little goofy. We estimate 29% in gross profit on this job from beginning to end, 29%. However, through our billings to date and cost to date, we've recognized substantially less gross profit. So how much gross profit have we recognized so far just off of billings and costs? Well, we're going to calculate that because it's important to see. $30,000 in profit, what percent is that? That's 6%. When you calculate gross profit just off of billings and costs, that's 6% gross profit. But we're saying the job will give us a gross profit of 29%. That's a huge difference there. That's what's leading to this huge underbillings. Something looks off. Why is it that all of the savings are coming in at the end? Not saying that it's not possible. There are some scenarios where that does happen, but how do we go from 6% to 29% in the last 5% of the project? Something seems off. And talking about what's remaining on the job, we have $195,000 in billings left. That's the contract amount minus the billed to date amount. That's $195,000. With $25,000 in cost to complete, that means the last phase of the job, we're going to recognize 87% gross profit. Why would that be the case? Why haven't we consistently recognized this 29%? Why are we holding it off in the end when we need to recognize 87% to get to this estimated amount? It just doesn't make sense. The numbers based off of billings and costs are telling us we're at 6%, but our estimate is propping up this underbilling so high that it's creating this unlikely scenario. So one of the first things I ask is, what's remaining on this job? What is left to complete this job? And they start mentioning different phases and numbers and say, now 25,000, no, we've got quite a bit more. Okay, so what is it? It's more than 25,000, all right? So start naming it off. And what are the costs? Material, subcontractor, labor. What happens is that there's substantially more costs left to complete the project. It's not 25,000. And it may be 100,000 or 125,000. So what do? You add cost to your total estimated cost. It's not going to do as well as you thought it was going to do. So you add $100,000 in costs. Total estimated cost to complete is $125,000. Okay, it wasn't 25,000. There's substantially more to complete. Now things are looking more reasonable. Now we have quite a bit of work left. We have $125,000 in cost to complete, and we have $195,000 in billings left. What that means is we're going to bill out $195,000, costs of $125,000, roughly 36% remaining in gross profit. Seems more palatable, right? Our gross profit off of billings and costs was 6%. Now we're saying estimated gross profit is 14%. That's closer as well. It looks more believable. We're underbilled $49,000 on this job. Again, that looks more reasonable in relation to percent complete and the contract amount. It's not as big of a red flag as the other scenario was. That's when you just adjust total estimated cost. So if the answer isn't in adjusting total estimated cost, it's likely it's in the contract amount. We have deducts that aren't reflected in this contract amount. The contract amount is too much, which is driving this higher gross profit amount. We have deducts that need to decrease that contract amount. There was work we're not going to be performing. So what do? You decrease the contract amount by the deducts. Say in this scenario, it was $125,000 of work that we aren't going to be doing and billing for. So decrease that by $125,000, that drops the gross profit. You see a decrease, 13%. That's a lot closer to this 6% that we calculated here based off of billings and cost to date. We're still 95% complete, but look how much that dropped under billings. It's not as significant as it was before. It's still quite a bit, I won't lie, in relation to percent complete, but it's a little more believable. We have $70,000 in billings left. That's the 575 minus the 505, and costs of 25,000, with 64% gross profit remaining to help catch up with that 13%. There's still a gap, but I just want to say those are some minor adjustments, and typically there are bigger adjustments than the ones I've made that drop it even closer to the actual amount that you're recognizing based off of bill to date and cost to date. Look at this information for reasonableness. Just because you have some contract amount and some total estimated cost amount in your schedule doesn't mean it's right. Just because you pulled the information from your accounting software for cost to date, billings to date, doesn't mean your WIP is right. You have to look at it for reasonableness. Look at it to see if it makes sense. Ask yourself, why would this be the case? Why are we billing at such a lower rate than what our contract amount is saying? Why are we recognizing gross profit at such a smaller amount than we're estimating? Why is that? Is that because the last 5% of the job we're going to hit a home run? You know, it's likely that you're not. So something here needs to be adjusted. Revisit those estimates. There's probably going to be numerous lessons on this because it's such a big deal. I hope that all made sense. Thanks again for tuning in. I'll see you in the next lesson.